All right, so good evening. I want to welcome you into our next episode on Common Reporting Standard CRS regulation in Nigeria. What you need to know. This topic is it's a sellable topic in a tax practice. So I will urge you to pay maximum attention. And towards the end of the section, there will be some questions on areas you want clarification on. We have also decided to volunteer to make it this very training, the beneficiaries to be open to getting certification of participation. But this is also a function of how contributive you are in the section where questions are asked. So please, I urge you to stay true and tune to the end. For emphasis sake, the topic is Common Reporting Standards. For short, we call it CRS. Regulations in Nigeria. What are the basic things you need to know? My name is Adekunle Cole. I'm privileged to be the managing consultant of KCP. KCP is a professional accounting firm. We render accounting services, auditing services, tax services, general advisory, and training. It is our custom to always put this disclaimer forward. The summary of this is just to let you know that the essence of this training is just for general enlightenment purpose. It does not constitute any advice. Should you require any professional advice on this topic, please feel free to reach out to us or any professional firm around your abode. What then is our objective? The objective of this training is as follows. We are hoping that participants who attended this training shall be able to, one, understand the intention of Nigeria in adopting CRS. Why do you think Nigeria, among other interested member nations, decided to adopt CRS? Two, display fundamental knowledge of CRS and its objective. It is part of our policy in KCP to always enlighten the public, particularly the taxpayers, and fellow professional colleagues in public practice and private practice. Rub our wealth of knowledge on each other as a tool to further strengthening the regard and integrity of the profession, and also to create an avenue whereby fellow professional colleagues can actually rub minds. The third one is to identify basic situations where adherence to CRS is required or will be required. Then the last but not the least is when you have been able to understand why government or Nigerian government adopted CRS, you've been able to attain the basic knowledge required of every layman in accounting profession and as taxpayers. You've been able to identify basic situations where adherence will be required. Then should you now need hands-on competence to ensuring that your employer or you as a taxpayer, or you are in a position to advising anyone, what are the things you need to know? How do you go about this? From whom do you seek advice? All these are what we'll be covering in the course of this training. We are glad to say that Based on what will be shared today and in adherence to the relevant provisions of the regulations on CRS, should you need any further advice or other ways to ensure that your client or your employer or your humble self fully complies with the relevant provision of this standard or this regulation, will be open to be of service. I'm sure we are all ready. I need to be very sure that everyone is well set before I go on. So if you are very much ready to going on this, can I see your response on the chat room? I just need hi on the chat room. Okay, Ayada is ready. Okay, good. I need more response. Just say hi on the chat room. Okay, good. So we are good to go. What is common reporting standard? What is common reporting standard? Common reporting standard for short is called CRS. Common reporting standard for short is called CRS. So anytime within the tax practice, within the international tax practice, if you hear of CRS or CRS returns, we are simply referring to common reporting standards. This section, unlike our previous section where we will be doing a number of calculations and likes, it's more theoretical. So there'll be a couple of readings I will make, and thereafter make some clarification or explanation around this. So the CRS is a standard for automatic exchange of bank account information on individuals and certain types of entities. What does this mean? Why do you think this is very applicable in Nigeria today and in the world at large? Within the tax practice, we've seen instances whereby Mr. A is a Nigerian, is resident in Nigeria. He earns income from Nigeria, but also have other investments or other returns or other reason to maintain one bank account or the other in any country around the world, right? What CRS is just talking about is that we want to create a platform whereby member nations who have subscribed to this particular regulation will collectively collate bank informations of liable or reportable persons in their country and share amongst each other. Let me throw more light on this. For example, we can take an example of, let's say myself, my name is Adekunle. I'm resident in Nigeria. I earn income in Nigeria, but I also have investments in Ghana. So anytime this is just fiction, it's not true. Anytime I want to make my returns to the relevant tax authority, I'll probably just disclose information about my Nigerian income. The relevant tax authority in Nigeria is not a witch or wizard. They will not be able to foretell whether I, as a taxable person, has incomes or stake in other countries. So what CRS, the platform CRS gives all these member countries is an opportunity for them to share bank account information. I need to stress this, that CRS is not a form of tax. It is not a form of tax in any way. Rather, it is the member nations are only sharing bank information. Their intention is that for you to have had or maintain any bank account in any other country outside your national country, definitely there must be transactions that give rise to the inflows and outflows of that account. So what I want to do is that if Ghanaians are maintaining bank accounts in Nigeria, this regulation expects that Nigerian RFI, that is reporting financial institutions, will collect all this information about non-Nigerians that maintain these accounts in Nigeria and share with the country where they are national, where they are, their national country, or where they are citizens of, right? First of all, the Nigerian government will have looked at this information to actually verify whether these individuals or these reportable persons have actually paid the needful tax in Nigeria. And secondly, share this information with their own country where they might also need it for one verification or the other. But what are they trying to do? They are trying to ensure that no individual or reportable persons or a taxable person in any way evade tax or avoid tax. But I need to stress it again that CRS on its own is not a form of tax. Rather, a regulation that gives room for bank account information of reportable persons to be collated and shared with the relevant tax authority that may require this information. So all countries that have implemented the standard are required to automatically exchange these informations on annual basis. So it is not necessarily that all the countries in the world have subscribed to this. You will get to know the numbers that have actually subscribed to it as we go on, but it is important to stress that Nigeria is actually one of those countries that have subscribed to it. So let's say, for example, again, that we have only Nigeria, Ghana, and South Africa that have subscribed to this. What it then means is that Nigeria will collect information relating to Ghanaians and share with Ghana Tax Authority, and also collect bank account information of citizens of South Africa who are South Africans and share with the what? The South African Tax Authority. And these two other countries are expected also to reciprocate in like manner. That is what we'll be looking at here. I will be looking at also what regulation have been made around this, how will this be done, what is the current structure that the FRS have put in place to ensure that they have maximum benefits from this. So how did it start? It is no longer news that every rational person in the world, irrespective of the country you hail from, do not want to pay tax. If you have your way, ordinarily you would not want to pay tax. So both individuals and multinationals are looking for both legal and illegal means to actually avoid or evade tax, right? But because of the agreement and the consortium that various tax authority in various nations have been putting together or put together through the platform of OECD, UN, United Nations, and the likes, they have made several proposals on how to curtail tax evasion, right? One of those proposals is what we are called CRS. So in August 2017, Nigeria resolved to implementing the CRS by signing the Multilateral Competent Authority Agreement, MCAA, on CRS. So this agreement is the agreement that every nation who wants to subscribe to this particular platform is expected to sign. And what benefit do you have in this? It means you have an obligation to providing every member nations with the relevant information about their citizens in your country, while others are also expected to reciprocate in like manner. I hope I'm not too fast. If you understood what I've explained thus far, I need a response on the chat room by just saying yes. I want to be sure that we are on the same page. So if you understand what I've explained thus far, can you just say yes on the chat room? Okay, good, good. So by way of testing what I've explained thus far, who can tell us on the chat room what we meant by CRS? What is CRS? Just the full meaning. You don't have to explain it. Just the full meaning. CRS means what? Can you type it on the chat room, please? Anybody? Okay, good. Adeoye, okay, that's very correct. Common reporting standard. Hello, can you hear me? Just indicate on the chat room by saying yes if you can hear me. Okay, okay, so we are good to go. So I said in August 2017, Nigeria resolved to implementing the CRS by signing the Multilateral Competent Authority Agreement on CRS. So what then does this mean? By way of the earlier introduction I've given, CRS allow Nigeria as well as subscribed member countries to automatically receive information on the bank accounts held in other countries by Nigerians who are taxable in Nigeria. So while Nigeria is open to receiving the bank account information of all Nigerians in those other countries, Nigeria is also obliged to also providing the relevant member countries with the respective bank accounts details of or information of their nationals. So I need to emphasize again that this is not a form of tax, but rather it is an avenue to determine whether those reportable persons have actually discharged all their tax obligations to their respective countries. So how can this be possible? How do you think that by sharing the bank account information, which includes the account name, the account number, the tax identification number, and of course the account balance and the nature of the account maintained, how do you think this will then give rise to or help the relevant tax authority in each of the countries to be able to determine whether the appropriate tax has been paid? So I put this in caption as all reportable financial institutions, including banks, custodian institutions, investment entities, as well as specified insurance companies in member countries are mandated to collect the required information and send to their respective tax authority. They are referred to as FRS in Nigeria. So we are not looking at all financial institutions now. The CRS regulation in its context actually define who or which among all the institutions we have in Nigeria qualifies as reporting financial institutions, right? And a typical caption of them are all banks, because banks fall into this category because their operations are open to nationals of Nigeria and foreigners that are resident in Nigeria, right? So because of that, there is a possibility that they will have the bank account details or information about all of these reportable persons. Then custodian institutions. These are institutions where not less than 20% of their gross income actually comes from keeping the financial assets for other people. So all these entities that qualifies as custodian institutions also qualifies as a reporting financial institution within the context of what? CRS regulations. Then you have investment entities. Investment entities are entities that actually keeps investment in different portfolios. They also have not less than 50% of their returns or income coming from various financial assets they are maintaining on behalf of other various individuals. But because the nature of their service is also open to both the citizens of a country and the non-citizens of the country, they actually fall under this category of reporting financial institution. Then the last bucket of, the last category of it is those which we call specified insurance company. Now, specified insurance company in this context are referring to various insurance companies other than those who maintain life policies, other than those who are strictly for life policies. So all categories of insurance, general insurance, name them, they fall into this category. And the essence of emphasizing or categorizing them as part of reporting financial institution is simply because their service too is most likely to be open to both the nationals of Nigeria and the non-indigenes in Nigeria. So we are still on the context of considering whether this is actually very possible. What do you think Nigeria has put in place to be able to make maximum benefits from this information that will be shared with them among other relevant, among other member nations? So we have this also as the relevant tax authority will then collate the information that relates to Nigeria and those of other countries that they have agreed to share this information and share amongst each other. One is that you must be a member of those, of MCAA. So your membership guarantees you to receive information about your own citizens in other countries, the various bank details they have kept or maintained there. And it's also, you also have the obligation to share with the relevant member nation their own information about their own citizens. Then the second thing that I need to emphasize here is that Nigeria has also maintained, they now maintain through the FRS, maintain a distinct department that only handles issue relating to CRS. That tells you how intentional the Nigerian government is to ensuring that there won't be excuse around, oh, I'm busy with other form of taxes. They now have a distinct department that the only thing they do is what? Analyzing and sharing those information relating to CRS. Then another thing that has been done is we now have a regular document that guides how the CRS operation is to be coordinated. That will be cleared or explained further later. But in the interim, I need to state it as Income Tax CRS Regulation 2019. So that document became effective on 1st of July 2019. So all these and many more we'll be discussing later on tells you that, oh, CRS has come to stay in Nigeria, and Nigerian governments, subject to the information made available to the public, have been able to portray that they are willing and able to make the best of these disclosures. Yeah, I've been mentioning reporting financial institutions all the while. Who do you think a reporting financial institution actually is? A reporting financial institution is any entity, most likely not an individual, but sometimes could be a partnership that renders similar service among what we have mentioned earlier on. But it's any entity in a participating jurisdictions. You know, I earlier cleared it that it is not all the countries in the world that are members to this, right? So it is only entities in those member nations or in member countries, or what we call participating in the jurisdictions, that is a financial institution. Now, I'm trying to make it more complex, but I will simplify it even as complex as it may appear to be. One thing is that you must have a country that have subscribed or signed into this MCAA, right? That qualifies you or that country to be regarded as a participating jurisdiction. So in that participating jurisdiction, you must be an entity that meets the definition of a financial institution within the context of CRS regulation, right? And at the same time, you must not also be an entity which the CRS regulation has regarded as a non-reporting financial institution. So let's now read it as a go now and see how much meaning this means to us. So we say reporting financial institution is an entity that operates in a participating jurisdiction that is a financial institution and is not a non-reporting financial institution. So as we go on, we're clear what then are examples of financial institutions and what other institution qualifies as non-reporting financial institution. So it then means that for you to have an entity, it can be classified into two. It can be a reporting financial institution, and the other side could be a non-reporting financial institution. But within the wordings of the regulation, it defines an entity as a legal person or arrangement such as a corporation, a partnership, trust, or foundation. So when you have a company, a corporation that renders services that will likely maintain or have bank informations or bank account details of a reportable person, then it meets the definition of what an entity is. Then if you have partnership, trust, or foundation that render similar service to, it then also meets the definition of what an entity is within the context of CRS. But I want to be sure that we are on the same page, because this topic is actually very theoretical, but if you follow me through, it is also very enlightening. And it is good for us as accountants and taxpayers to know it, because as an individual or an employee, it makes you much more employable or relevant in any industry where the knowledge of this will be required. So when things like this is being discussed, you stand the opportunity or the advantage of having a good understanding of what is being discussed and being able to contribute meaningfully. As an employer who might have similar exposure around this, it gives you an understanding to know how to better plan your tax affairs. Don't say, oh, I have some accounts hidden in some country. You never can tell whether those countries have actually subscribed to this multilateral competent authority agreement, right? So you need to ensure that you do your tax planning without necessarily being evasive, but comply as the law has also required. So for us to be sure that we are on the same page, I want to know whether anybody have any question thus far, but in the absence of none, just indicate hi on the chat room. In the absence of any question, just indicate hi to be sure that we are actually on the same page. Any response? Okay, good. Samuel is on the same page with us. Okay, good. John, who else? I need more response. Okay, good. So we are good to go. We are good to go. All right, so we've explained what an entity is, and I have earlier emphasized that an entity could either be a reporting financial institution or a non-reporting financial institution. If you have also followed very well, I've given you various categories of reporting financial institution. I earlier mentioned it can be an investment company, it can be a custodian institution, it can be What other one? Who can give me more examples that we have mentioned to be sure that we are on the same page? Who else can give me one more example of reporting financial institution that I earlier mentioned in my previous slide? Anybody? Okay, while I'm expecting that, okay, insurance company, no. Life assurance company does not qualify as reporting financial institution. They will rather come under non-reporting financial institution. But somebody asked a question here that I want to quickly address. The question is that we should please clarify nationals that have accounts in other countries or nationals who reside in other countries that are affected by this MCAA. Ambrose, I didn't get your question very well. Is it possible you reframe it or you quickly unmute your mic and ask the question? You have 1 minute to do that. Otherwise, I will just continue and suspend it till when we are finished. Ambrose. Okay, so you prefer us to handle the question when we finish. That's good. Okay, so we've mentioned that we have custodian, investment, specified insurance companies, and the likes. Now we are looking at entities that comes under non-reporting financial institutions. Here we have government entity, any form of government entities. They come under non-reporting financial institution, international organization, central bank, other than payment on obligation held in commercial activity. But in their role as CBN, there is no qualification as a reporting financial institution. So we have broad participation retirement fund. Every entity that keeps all forms of retirement fund, pension, NHF, name them, they don't qualify as a reporting financial institution. Narrow participation retirement fund, still whatsoever nomenclature, the moment it's a retirement fund they are maintaining, there is no qualification. They didn't meet the criteria of a financial reporting institution, reporting financial institution. Then you have pension fund. I earlier mentioned this. There is no qualification. Qualified credit card user does not come under this. In this context, we are referring to Visa, MasterCard, and the likes. They don't meet those that requirement. Exempt collective investment vehicle, trustee document for, trust, and any other entity with low risk of tax evasion, similar characteristics to the above defined in domestic law, does not meet the requirement under this regulation. So I think we've been able to put more light on what an entity is, who is a financial institution, which of the financial institutions are reportable financial institution, and which one are non-reporting financial institution. We've also been able to lay the fundamental objective of CRS. What do you think the thinking around CRS is? Why do we need to know as a taxpayer, as an accountant in public and private practice, and even at responsible citizens in the nation. Everyone needs to have a good fundamental knowledge of this, so that when you have this exposure, or as you continue your day-to-day operations, or in your employee capacity, you'll be able to act responsibly. But I need to also stress this. For those who might be looking forward to taking up a tax-related role, this may be another very examinable area in the course of your interview. So what information are to be shared? We've been talking about country A, who is a member of the MCAA, we share information with the other entity. What exactly are they sharing? The reporting financial institution that within the context of the explanation we have made are to share the information on the bank accounts held by individuals that are tax residents but citizens of other countries with the FIRS. So what does this mean? I've tried as much as possible to stress this, that CRS is not another form of tax. We are not paying, or the liable person, the reportable persons, are not to pay any form of tax within the context. But if their bank account information are then shared with the respective countries where they are citizen, right? And subject to the review of the disclosures that these reportable persons have made to the relevant authority in their home country, if the tax authority feels, based on the information available to it, that, oh, the reportable person concerned have under disclosed the taxable income, it then could give rise to tax based on the relevant applicable tax. But CRS on its own, it is not a form of tax. So the FIRS will then automatically share the information, this information, with other countries. We've said it earlier on, that reportable financial institution or reporting financial institution who maintains information of these reportable persons holds the information. They have the obligation within this regulation to share it with FIRS. FIRS receive the information, check whether those people that have been reported, they have actually paid the relevant taxes they should pay, or by reason of this additional disclosure, they could be more liable to one form of tax or the other. After they've made their own use of it, they will send the information not just to any country, but they will receive it, send the one that relates to each country to the relevant country, while those other countries are expected to also respond in a similar manner. So what information are to be shared? We are still under this context. The information will include the details of the bank, where is the bank concerned, which particular bank does the reportable person maintains an account with. What is, you know that before you can open any bank account in Nigeria, you need to have a tax identification number. So you have the tax identification number of the owner of the bank account will be part of the information that will be shared. The balance in the account as at the end of the period, whether it is a positive balance or a zero balance. The regulation further provides that where for any reason the balance on that very account is in negative, you should report it as zero, please. Under no circumstance should this particular disclosure contain negative sum. So for some type of account, information on interest. So in instances whereby you have a reportable person that have debt instruments or financial assets within the activities of this reportable person, they should also disclose. So that means that besides the accounts they maintain as customer, debt instrument they have subscribed to in terms of debentures and the likes, they need to also disclose the information, equity interest that they have, in those reportable financial institutions, they need to also disclose, and by extension, incomes that have been earned or could have been earned on this instrument as interest or dividends or other income will also be shared alongside. So what use could be made of this information? The information shared is not a cast and stone for subjection to tax. I've said this, I've reiterated this time without number, that this information, it is not just that as you share the balance, they will just apply the tax rate on it. No. So what the relevant authority will do is to review what vis-a-vis what they have disclosed to know whether the upward movement in the account balance or downward movement in the account balance will further expose the reportable person to more taxes. Okay, I need also to be sure that we are on the same page, because I've said it at the beginning of these sections that there will be a couple of questions that will be asked, and on the basis of this question, we will then determine whether we have the fundamental knowledge for us to actually issue this certificate of participation, right? So if you are with us and you understood what we have explained thus far, can you confirm I on the chat room? Okay, good. Who else? Good, good. So we are good to go. We are good to go. Thank you. So the next thing we are looking at is how will the reporting financial institution know the tax resident of the reportable persons? How do you think that those banks will know the reporting, the tax residents of those reportable persons? The regulations that have been, the structure or the framework that have been provided expects that when the banks or any reporting financial institution is to file these returns, they are to file based on country by country. Say, for example, our First Bank of Nigeria, which qualifies as a reporting financial institution, will not just collate all the information of all non-indigent and send it via the returns platform. No, they will have to segregate it into each country: Ghana, Togo, South Africa, and the likes and the likes. How do you think the bank or the reporting financial institution will have this information? It is expected that if they do not have the information before or as at the time this regulation was introduced, they are expected to do what we call the KYC protocols, right? They need to circularize all of their customers to provide their various nationality. But it is expected that they most likely will have provided this information as at the time the bank account is to be open. So the CRS regulation, as well as the relevant tax authority in each country, will regularly give guidance around this. This is what we are very familiar with in Nigeria. Those who are operating in Togo, Ghana will also put in place a relevant framework that will ensure or support the reporting financial institution to be able to act as expected of them. So for accounts that are opened after the CRS commence, reporting financial institutions are required to obtain this information as part of their KYC protocol. KYC is know your customer. Okay, then while the existing accounts, those accounts that they have been maintaining, or those debenture interest, stake or instrument they have been maintaining, or equity instrument they have been maintaining before the advent of these, reporting financial institutions are to review the records to see if they have or can infer this information. Where the required information are not on record, reportable persons shall be required to update their records. I've explained this earlier. Now, when was the commencement date of CRS in Nigeria? So please, we've been able to lay basic foundation. Now we are going into critical areas because as earlier explained, as employees or those who are looking forward to changing their job, whose role will involve all of these are various examinable areas. And for those who are also working as consultants, you then need to get this information and be able to advise your clients as appropriate. But at KCP, we are open for collaborations in any way that you think we can be of assistance on this issue. So in August 2017, the relevant steps to initiating CRS in Nigeria was kickstarted. Before this particular date, on this date and after this date, local frameworks and other necessary guidelines are put together. So if you remember, I mentioned the CRS regulation, which in Nigeria we call the Income Tax Common Reporting Standard Regulation 2019 was introduced, and this was gazetted and becomes effective with effect from 1st of July 2019. So even though steps has been introduced or steps have been in progress before 2019, but 2019 was the official commencement year when CRS became effective in Nigeria. So the returns, which we call the CRS returns, official due date for filing in Nigeria is set at May 31st. This is something very close to company income tax returns we used to file. You know that the company income tax return for most companies that their year end ends in December, the obligation to filing is June 30th of every following year. But unlike that, the obligation to filing CRS returns for every company is May 31st of every year. So if CRS became effective in 2019, it then means that the first reporting period when reportable persons are, reporting financial institutions are expected to filing these returns will then be 31st of May 2020. The regulation became effective in 2019. As at May 31st, 2019, it was not in place. So the first time every liable reporting financial institution is expected to filing these returns is 31st of May 2020. So officially, we had the Common Reporting Standard Regulation Gazette, and the first returns was set as May 31st, 2020. But what we observed, because last year was the very first time when these returns was being introduced and expected to be filed, compliance was not immediate. In fact, very many liable entities were not even abreast of this obligation as at that date. So many people did not file those returns, but FIRS in its magnanimity decided to give an extension to that for that filing date to be, to August 2020, right? But entities who did not file as at that date in respect of the liable or reportable persons in 2019 accounts may then be liable to fines that we will discuss on later on, right? We'll be talking about the fines. What are the fines that comes as a result of your actions or inactions in respect of this? Then it is also important to stress that as at 31st of March 2021, every reporting financial institution is also expected to have filed If they have not filed, it's not too late to seek redress on how to quickly do it, because the fine is in two buckets. One is failure to filing on the due date, which I will just throw it out now, is 10 million naira. Every other month of failure, then 1 million accrues, right? So it is very important that we have this at hand and advise those entities that are liable as appropriate. So why CRS, or automatic exchange of information? Why do you think we really need this? We've been able to emphasize this all the while since we have started this session. We have been able to emphasize that information from the global forum, that is from those within the multilateral competent authority agreement, those who have subscribed to this, suggest that exchange of this sort could be a very effective tool in tackling what? Tax evasion and avoidance. If you remember my earlier illustration where I take myself as an example and assume that I'm a Nigerian but also have investment or bank accounts in Ghana, of course, my inflow and outflow in the bank account in Ghana must definitely have arose from transactions that I am doing there, whether a passive income or or active income, or whether a taxable income or not taxable income. Something must definitely have given rise to that. It is expected of me within the context of our tax law in Nigeria. Every Nigerian is subject to tax on its global income, whether income made in Nigeria and outside the shores of Nigeria. So if I had earlier failed to disclosing the incomes I earn outside of Nigeria, definitely then means that I will have underpaid my tax, right? So one of the first tools that CRS came to curb is that even if I decided to conceal this information and not disclose it to the relevant tax authority, FRS or the state IRS will still be able to get this information by reason of these CRS obligations, right? Nigeria will be able to get those information provided that the home country where I held those bank accounts have also subscribed to these CRS. So that's one benefit that could come from it. It helps to tackle tax evasion or tax avoidance, as the case may be. The second thing is that it could also be effective as a tool that has a deterrent effect. What does this then mean? What this then means is that because everyone is now enlightened and they know that whether I disclose or I do not disclose, governments will still catch up with this information. So ordinarily, it encourages voluntary compliances, right? So that is what we mean by a deterrent effect, right? It makes people to, going forward, voluntarily disclose this information. You will now see people or taxable person coming forward to saying, this is my Nigerian income. I also have one in Ghana. I have one in South Africa. I have one in this, I have one in that. So that is, those are the major benefits that comes with CRS. So this is just a further explanation of the deterrent effect. Can CRS actually work in Nigeria? Let me give each and every one of us to actually rub minds quickly on this. I just want you to respond with yes or no. Do you think CRS can really work in Nigeria? Do you think CRS can actually work in Nigeria? Oh, yes, it can. Okay. More response. Oh, okay. CRS can actually work in Nigeria. We have outlined the fact that because Nigeria, first of all, or in the first instance, has taken the bold step to subscribe to that platform where member nations or competent tax authority can actually collaborate by sharing relevant information within the context of these regulations that are relevant to each of the countries. So it then gives Nigerian tax authority the platform to get those information. That's one. Two, Nigerian tax authority through the FRS has also created a separate desk that will review this information. So it's not just about, oh, we have those enormous information and nobody will be responsible to review it. So we now have a separate desk that all they do is to manage automatic exchange of information. And to tell you that this thing can actually work also is that the returns are also not shared in paper form. It is an online returns, right? So because it is electronic, the rate of review will be very fast, and the number of hard copy documents to review or the time it will waste before information will be shared among member nations has been edged. So, and also we have also buttressed the fact that in addition to subscribing to that platform, creating a separate desk that will address this concern, we also have a separate regulation which we call the Income Tax Common Reporting Standard Regulation 2019, separately put together for the purpose of this regulation. This does not make the regulation compulsory for all liable entity, but it also provides fines that will be levied on whoever that has the obligation to comply but did not act as expected. So all this and much more shows the level of seriousness on the side of the government to driving CRS compliance. So we've talked about what CRS is. How then will this thing be done? What then is expected of the reporting financial institution? How will they make the returns? So I will just give a general overview. For those who might care to know how this will be done in practical, they probably might need to reach out to us, but it will be on a condition that you have liable entities. You then need to reach out to, particularly for those who are working in audit firms, you then need to reach out to your employer and review. If you render tax services to them, review within the context of your client's profile and see which among those your client's profile actually fall into this bucket, right? We at KCP will be open and willing to be of a collaborative service in this regard, but we will give you the general overview free of charge. You need to first of all identify that, oh, you are a reporting financial institution, or you have a reporting financial institution as a client to whom you render tax services. And the scope of your service also covers this. If it doesn't cover it, you can put a proposal to the client that, oh, you have an obligation to doing this, and we can do, or your firm can do it for the client. But if you have difficulty in that area, just like I said earlier, we are open to being of collaborative service. So first step is that you need to identify that you have or you are a reporting financial institution. Two is that you need to review the financial accounts. The financial accounts that we are talking about in this context is look at the corporate customer profile, the various bank accounts, the various debt instruments you have, financial liabilities you have, the various equity instruments that you have. Who are the stakeholders? So you need to analyze the equity interest of the company. Do you have indigene or non-citizens of Nigeria that have equity interest in that reporting financial institution, or you have non-indigenes or non-citizens of Nigeria that has debt instruments in the reporting financial institutions, or you have non-indigenes among the regular corporate accounts or individual account holders maintained by the reporting financial institution. The third step is identify the reportable account. Not all accounts are reportable. Otherwise, those various tax authorities will be overwhelmed by information. So those in Nigeria, reporting financial institutions in Nigeria are just to report reportable accounts in respect of those non-citizens of Nigeria, right? You are not to disclose every information about Nigeria. If FIRS so decide to ask for those of the nationals in Nigeria, you'll be obliged to providing it at no fine. But where you fail to providing the reportable account of reportable persons, and where you have those accounts and you fail to provide it, you will then have conflicted the contents of the regulation. Then step 4, you then need to apply due diligence rule to be sure that you have identified what you need to identify, you have picked the relevant information that is required for the purpose of this disclosure, and you have disclosed it in the manner that you are expected to do. Otherwise, the fact that you have filed the returns, but if you fail to disclose what you ought to disclose, you can still be open to fines that could be levied by the relevant tax authority. And then the last one is having identify a reporting financial institution, review the financial account, identify the reportable account, apply the needful due diligence. We'll be discussing this due diligence in our practical section. That is for those that actually have relevant issues that is practically applicable. They can reach out to us. Then you are now expected to file in this information virtually. It is not to be filed in hard copy, as I earlier explained. It should be filed online. There is a protocol and procedure to getting that done, but that is not within the context of this training. This training is just for every participant to have basic fundamental information about CRS. So we've been talking about reportable accounts, which is based on the final account, right? This is just to give you more information on what could come as reportable accounts under the various buckets of reporting financial institutions. Under those who are into depository, who maintain depository accounts like the banks, they will have to make those disclosures under that. Then we talk about the custodial. We also have disclosures over the assets that they have maintained. Then equity and debt interest or instrument, I've mentioned that. That is most likely to be with investment entity. Then cash value insurance, that is more likely to be with those specific or specified insurance entity. This it's also important that among the many services maintained or accounts maintained by this reporting financial institution, there are some categories of accounts that are not, expected to be disclosed. They are called low risk accounts. One of those accounts are retirement and pension accounts. Other tax favored accounts, they are not expected to be disclosed. Time life insurance contracts, you are not expected to be disclosed. That is why we said life assurance company or insurance company are not obligated under this regulation. Estate account is not expected to be disclosed. Estate account is account maintained for a deceased person in respect of his estate. Escrow accounts are not expected to be disclosed. Escrow account is a third-party account. Let's assume you have a tripartite relationship. Mr. A and B is into business, but this account is now to be maintained by Mr. T, which is not a primary obligatory to that business. That is an escrow account. Mr. T is just to maintain the account on their behalf, right? Escrow account is not to be disclosed. Depository accounts due not to, that is not due to returns on overpayment is also not to be disclosed. And the last one is any other low risk excluded accounts which the relevant tax authority may advise from time to time. Then we've also talked about, we've been mentioning reportable account, reportable account. Reportable account is an account held by one or more reportable persons, right? Sometimes it could be a passive non-financial entity with one or more controlling person that is a reportable person. That is, this one comes in instances whereby you are maintaining or you are having an equity instrument or a debt instrument. So this is just to further explain what we mean by reportable account. It's a financial account held by one person who is a reportable jurisdiction person. That is, you are within that country that subscribed to that MCAA agreement, right? And is not excluded from being a reportable person, is a reportable account. I've explained all of this. This is just for reference purpose. If you're going through this video or these slides much more later. So reportable jurisdiction, I've also explained this before. This is all jurisdictions with which the financial institution's jurisdiction has an agreement to automatically exchange information under the standard. So Nigeria alone is a reportable jurisdiction, and every financial institution or every reporting financial institution are expected to adhere to this regulation. So what then is reportable jurisdiction person? Is an individual or entity resident for tax purpose in a reportable jurisdiction. So the accounts that the reporting financial institution is expected to disclose is not in respect of individuals alone. It's also in respect, or it also includes bank account information, equity stake information, debt instrument information, held by non-Nigerian company. So controlling persons that are reportable, we've also explained this, but just for reference purpose, is an account, okay, this is just a repetition, I'm sorry for that. Then I believe at this section, we now need to, we are open to asking any question that you might not, that you might have during or since we start this session. But if there is no question, we will then quickly go into our various teasers to test what we have understood about what we have explained thus far. Your participation in this session is very, very important because it will determine who eventually will have that our certificate of attendance. And it's also important to stress that we have taken note of those who have been with us since the very beginning and all through these moments. Abiodun is with us, James is with us, Larry is with us, Oluchi is with us, Sharif Adin is with us, Adeni is with us, Olaimbo is with us, Samuel is with us, and there is this person, Techno. What is the name? Can you provide your name on the platform, please? Who is Techno Common 15? Okay, Omonike is with us. So that's awesome. I will quickly provide my email. Sorry, I'll quickly provide my WhatsApp number. I need you to, at the end of this section, quickly send your various emails so that we will send the various certificates of participation to you. All right, so I'll wait your question before we start the teaser. Any question? Any question? That is my WhatsApp number. I need you to take note of it, and immediately after this section, share your various email, please. We have taken note of those who have been with us all through, and they are the only one that will be beneficiary of this certificate of attendance. And it's also important to stress that the recorded section of this training will be made available on all our social media platforms, particularly our YouTube channel. I will also provide the link to that YouTube channel at the end of this section. So I await your question, but if there is no question, confirm on the chat room so that we can go on with our teasers. We just want to rub minds and test ourselves on the various things we have learned in the course of this session. Any question? Okay, Ambrose is with us too. We recognize, though you joined late, but you're welcome. Okay, so in the absence of any question, let's go let's go on with this session. Please, I will quickly need you. The next training we'll be having, we'll make your response to the questions automated. Everybody will be able to see exactly what they have scored in this session. Okay, I think Ambrose is asking a question. If a Ghanaian who resides in Nigeria is expected to disclose his income to the Ghanaian relevant authority, your question is not complete. Can you make it complete, please? Or possibly unmute your mic to quickly ask the question. Okay, so while we look forward to the details of that question, please everybody take note. At the end of this section, I will need you to confirm on the platform how many of these you got right. So we go on. Teaser 1. What is the full meaning of CRS? We are looking forward to the first person that will that will answer this on the platform. What is the full meaning of CRS? Just say A or B. Okay. Some people are doing over syllables here. People are saying also. Okay. Okay. Okay, question 2. Question 2. Now, please respond per question so that we can keep track of who got it right or who did not, so that we can also correct whoever that got it wrong. Question 2, everybody answered, most people that responded answered B, and that is the correct answer. Common reporting standards, not common reporting system. Okay, question 2. What is the full meaning of AEOI? Okay, Larry A, Adeni A. Monica, I didn't get your response. What's your own response? Ambrose, I've not gotten your response. What is the full meaning of AEOI? Okay, A. Okay, so everybody went for A. So it is not automatic exchange of income, but rather automatic exchange of information. So question 3, the CRS is another type of tax to be paid by liable person. True or false? Okay, false, false, false. B. Oh, that's very encouraging. That's very encouraging. Okay, so the next one is, what is the frequency of the exchange of information among member countries? What is the exchange of information? What is the exchange of information? Ambrose A, Techno A, Adeni A. What about others? We're not getting response from them. We won't give you the certificate. Okay, awesome. I think we all deserve an applause. Okay, the next one, number 5. What did Nigeria resolve to implement? I'm so sorry, this should be, when did Nigeria resolve to implement the CRS by signing the MCAA? When? Number 5, when did Nigeria resolve to implement the CRS by signing the MCAA? Please indicate the number of the question you are answering. We are now separating the men from others now. Some people say A, others are picking B. I didn't see any C. Okay, so it means the answer will be between A or B. Samuel, I didn't get your response. Oh, Ambrose said is C. Okay. Samuel, why are you doing over syllabus now? We are still handling 5. Okay, so for clarity purpose, you remember I stressed this time without number. It is not C. It is not B. The answer is August 2017, A. August 2017, A. Please, everyone should take note of that, please. Okay, the next one, what is the full meaning of MCAA? What is the full meaning of MCAA? Okay, Adeni, Larry, Ambrose, Adeoye, I'm not getting your response. We'll give you the certificate. Okay. Shosoya did not participate in this our teaser. I've spotted you. I won't give you the thing, otherwise start responding now. Shosoya, where is your response to be sure you are with us? Otherwise, you may not be eligible. Okay, good. We have you. Okay, so what is the full meaning of MCAA? The correct answer is the multilateral competent authority agreements, right? The next question is, CRS do not exempt Nigeria as well as subscribed member countries to automatically receive information on the bank account held in other countries by Nigerians who are taxable in Nigeria. True or false? True or false? Sorry, that will be number 7. I'm so sorry. It should be number 7. Number 7, true or false? CRS do not exempt Nigeria. Ambrose said true. Samuel said false. Adeoye said true. Techno said false. You can see we have a divided house. We have a divided house. Remember when I was making this presentation, I emphasized that everyone that subscribed to that MCAA have an obligation or a right to have information shared amongst them. So the correct answer will be false. The question was tweak. CRS do not exempt. No, it didn't exempt anyone. Okay. Reporting financial institution include all the following excepts. I'm so sorry, I prepared the questions almost the due time to this section. That is why some mix-ups are there, but let's disregard the numbers. The next one is 8, right? Reporting financial institutions include all of the following excepts: investment institution, custodian institution, pension fund institution. We've only gotten response from 2 persons. Okay. Adeni, we don't have your response. James, we don't have your response. Adedayo, we don't have your response. Okay, so the correct answer will be pension fund institution. They are not part of the reporting financial institution. The next one now should be 9. All reporting financial institutions, including banks, custodian institutions, investment entities, as well as specified insurance companies in member countries, are not mandated to collate the required information as sent to their tax authority, therein referred to as FRS in Nigeria. The next question now is actually the 9th question, right? So what is the answer to the 9th question? Is it true? Adedayo said not true. That is false. Ambrose said false. False. Techno, we don't have your response yet. Oluchi, I've not seen your response. Oluchi, where is your response? Please mark it, or I won't give Oluchi. All right, the correct answer is false. Okay, the next one now is the reporting financial institutions are to share the information on the audited financial statements held by individuals that are residents but citizens of other countries with the FIRS. Is it true? This is the 10th one, Abi?
Yes.
Yeah, number 10. Is it true? It's actually false. The information they should share is not the audited financial statements, but bank account relevant information. Then the next one, which is our 11, based on the information shared on the CRS returns, reportable persons are automatically subject to tax. True or false? Based on the information shared on the CRS returns, reportable persons are automatically subject to tax. James, are you with us at all? They are not automatically subject to tax. The respective tax authority will still have to review and determine whether that particular reportable person has supplied or provided sufficient information. So number 12, which we tag as 11 here, I'm so sorry. First CRS returns is expected to be filed when in Nigeria? When was the first CRS return expected to be filed in Nigeria? When was the first returns expected to be filed in Nigeria? Ambrose said May 2021. Techno said May 2021. Lanre said May 2020. Samuel says no. The correct answer is May 2020. That is A. Remember I said the regulation was gazetted in 1st of July 2019. So the first returns was expected to be filed in May 2020. All right, information from the Global Forum suggests that exchange of this sort will not be effective tool in tackling tax evasion and avoidance. Is it true or false? Is it true or false? False. False. That's actually correct. Because information avails that there will be sufficient tool to actually tackle tax evasion and avoidance. Then the last one, I think this is the last one. Deterrent effect of these returns means what? A, encourage voluntary compliance. B, encourage tax evasion. The last question, is it A or B? The last one is that deterrent effect is to encourage voluntary compliance. Encourage voluntary compliance. We want to appreciate every one of you that have been able to stay tuned with us to the end of this session. Please, I will encourage you that this is not all you need to know about CRS regulation in Nigeria. I will very much encourage you to still seek for much more information. There are so many of this information that will be made available on our various social media. We'll be sharing the CRS regulation 2019 itself so that you can see and read it through for yourself. Because of time will not permit me to still go into other sensitive areas of these regulations and how to practically file these returns, how to conduct due diligence and all that. But I've made my WhatsApp number available to any person who might have exposure in this regard, whether at your employer or you in person, or you have clients that you know may be exposed to this. At KCP, we'll be willing to being of service or collaborative service with you. I wish you all the best. I want to leave the next 1 minute for any question. Okay, Ambrose is asking, please, I'm not a tax consultant, neither auditor, nor work in RFI. How can I gainfully benefit from this knowledge? Oh, if you still want to know how the other practical sections will be, it will be available for a paid service. You might decide to reach out to us and we will give you a considerate fee for that practical session. But with this, sincerely, you have the fundamental knowledge of what you need to know about the advent of, about the operation of CRS in Nigeria. So for our YouTube link, channel, just type Kunle Cole and Partners. You will have access to our YouTube channel, Kunle Cole and Partners. I will encourage you to subscribe. I will, in a minute, please, I will also share the link itself here. If you just click the link, it will take you directly to the platform. Just 1 minute, please. So while we are waiting for the link, please ensure you have on the screen our linking page. Try as much as possible to follow us so that you can get relevant updates on tax, on audits and accounting in general. We've we've organized similar section of this nature on IFRS 16. It's fully available on our YouTube channel. We've done something on IS 12, practical application or approach to deferred tax. You can check that also on our YouTube channel. So many informations are very much available for you. Try as much as possible to follow up, or should you have any reason that you need any other training on any issue in tax or audit or accounting standard that we have not organized public training on, you can personally or as a group reach out to us. We will be willing to offer those training, whether as a group or one-on-one, at a considerate fee. I think that is all for now, but before we call it a day, please wait. I want to share the YouTube channel link. Okay, somebody is asking for the channel, the video session on VAT. It's available on that YouTube channel. Please just go there. You have access to all of our recorded sections there. I'm sure you can see my screen. This is like the person who is asking for the last section. This is it there. You can copy the link. So just click on that link. It takes you there and you can have access to all of the sections we have had. I wish you all the very best. Do enjoy the rest of the evening and watch out for our next episode on the public free training. Good night. You can unmute your mic if you want to say anything before we finally shut down. Good night. But please don't forget to send me your emails. For everyone who has participated, don't forget to send me your emails stating your, on my WhatsApp line, stating your full names. All right, I wish you all the best. Good night, good very night. Thank you for your time.